What's up, guys? Simon here. Today, I wanted to go ahead and talk about the 2021 real estate market crash, or is it going to be a boom? So in this video, we're going to go ahead and discuss what I think would be the 2021 market outlook for real estate. Before I go into this video, go ahead and hit the like button and subscribe to my channel. As always, I appreciate it. Let's get into this video. Okay, guys, so the pandemic shattered a lot of things we have known to be as a niche or human nature or true to our everyday lives. Everything's different, including the real estate market. You can't go into an open house anymore. Everything's done virtually. There's so many things happening in the world today that were not happening a year ago, that everything is kind of turned upside down. The one thing that's been interesting with this pandemic and with the large loss of jobs and unemployment rates climbing, as well as being at all-time highs, is the fact that real estate actually rose. In my opinion, this happened for two reasons. One, the interest rate. The Federal Reserve rate is at record lows. I've seen the interest rate drop almost to a near 2%. A 30-year average is around 2.5 to 2.8, depending on the bank you get. With the interest rate being so low, the demand for housing is very high right now. With the supply of the real estate, not as many homes are up for sale. So the supply is down, the demand is high. That's driving the prices of real estate to go up. Now, with the lockdowns, originally it drove the prices down a bit, and that was for about March through May of last year. Once the lockdowns were kind of accepted, the real estate market, specifically in the suburban areas, started going up. Markets drove the suburban areas up because people needed more space. People didn't care where they worked from because they could work from home. So they wanted to get out of the city life and move into a different neighborhood, a different state, or whatever it may be, driving real estate prices up. So the real estate market is heading for a very good recovery from the initial stages of the pandemic.
We haven't seen appreciation like this since almost 14 years, 2006. Can we sustain it?
That's right. Yeah, the recent monthly price appreciation we've seen in the Zillow Home Value Index is the fastest since actually the peak pace of appreciation back in 2006. The annual appreciation looking back over 2020 was a little bit more modest, about 7.5%. But we expect this to be sustained well into 2021.
Forecasters are actually expecting it to go up another 3+% this year and into 2022, which is a very good outlook for the real estate market if you're in real estate and investing. Another thing that's been keeping the real estate market at a high is the fact that the stock market has been doing very well. So even though there's a pandemic, even though there are lockdowns and a lot of small businesses closing, there are potential foreclosures looming as well, the real estate market has remained high because the stock market has done well. So people have had money for the down payments and so forth to invest in real estate. Now with the lockdowns, the real estate in the inner cities have slowed down a bit. So condos have been up for sale for a lot longer than your average listing time. So if you have a condo that you're trying to buy or sell, it's going to be affected by the pandemic. No one wants to live in a city that's locked down. It looks like a big ghost town with tall buildings. Having a condo in San Francisco, I know my real estate value has dropped because of the fact no one wants to live in a city in a small apartment. And when there are two people working from home and you have a small place, each of you cannot take a meeting from that small place. So condo values have dropped, even though the interest rates are still a lot lower. The demand for condos has fallen a bit and the supply has gone up because more and more were being finished and built. Remember, the condos that were being built in 2018, 2019 are just finishing up just before the pandemic and maybe potentially after the pandemic. So the surplus of condos are out there. And if you live in key areas like Dallas, Manhattan, San Francisco, Los Angeles, condo values are probably not going to go through the roof this year. And in fact, they may dip. You may have a harder time selling off that condo, reason being, or you may not consider a condo for the reasons being that there's also an HOA fee. In the past, people were buying, less affordable houses or condos, and then understanding that they'd pay an HOA fee because they couldn't get a bigger loan. Now you could get a bigger loan at a lower interest rate and buy a more expensive property, not worrying about paying the HOA fee of that property. People are basically passing up on the HOA fees and going with houses. The migration from certain key areas in California and other areas in New York have driven other area real estate prices up as well. So Texas, Florida have seen increase in real estate prices because people from New York are moving to Florida to save on taxes and have better weather. And people from California are potentially moving to areas like Nevada, Texas, Arizona, and so forth, because they're able to work from home and they're able to buy a bigger house or finally afford a house. As to their situation here, they could not do so because everything is so expensive. So with the influx of people leaving these very rich metropolitan areas such as San Francisco and New York, the incoming crowd that's coming into those states such as Texas and cities like Dallas or Austin are seeing an influx of real estate prices going up because the fact that buyers can afford to pay more than the local resident that's lived there for a while, earning a smaller salary.
It's getting even harder for people to find new affordable homes to buy in the Austin area. According to new data from the Austin Board of Realtors, the median price for a home in the 5-county Austin area, $365,000 now. That's an all-time high.
The interesting thing about the real estate market is the home value of the prices in 2021 has not hit its peak yet. So it's not like we topped out in the real estate and now it's no longer going up. Right now, it seems to me that in 2021, the real estate is even more in demand because of the shortage in supply of houses. In fact, we're off about 30% on availability in houses in the country. So it is a big difference in terms of availability. And as we know, supply and demand, if there is a shortage in supply, the price will go up even if the demand stays the same. But in this case, the demand is even higher because people want to get out of their condos or small places and they want to take advantage of that interest rate. Few things to look for. If the interest rate goes up, that means the prices of the real estate will go down. So if the interest rate is going to go up, less people are going to qualify for loans and less people are going to want to buy a home. So then you're going to have a slowdown in the real estate market. So that's something that could lead towards a crash. Another thing we should look out for is the stock market. If the stock market starts dwindling a bit, and with the incoming new presidential cabinet, you're getting an opportunity to see if the stocks are going to stay the same or if they're going to go down. But if the stock market starts tumbling and hitting lows, you're going to see the real estate market shortly following as well. Typically, the real estate market follows after the stock market, and real estate feels the wave of a recession or a depression a little bit a year or two down the line from the original point of the recession and depression. And guess what, guys? Right now, 1 in 4 families cannot pay their rent or mortgage, and they're only being bailed out by the COVID protection programs for evictions, as well as the COVID non-payment programs to the banks. So are we going to see a big foreclosure coming up? Potentially, yes. But if the stock market is going up and if the interest rate remains low, people are going to snatch up those houses that are in foreclosure. So this is a very interesting time and bubble that's very hard to predict if there's going to be a crash or if there's going to be an increase. And only time will tell, but the guessing game can be stopped by looking at the trends of the stock market relative to the supply of houses on the market, as well as the interest rate. So those are going to be our 3 main points that we're going to be looking at to make sure nothing goes wrong or that we continue on a positive path of earning real estate income or appreciation from your real estate. So the median price of housing was $340,000 in December. That's up 14% nationally than the year before. That is a pretty good number considering we were in a pandemic. And in fact, the national inventory has decreased more than 30%. In fact, it decreased 39.6%, with less than 700,000 homes being sold for the first time while this data was tracked. So that is an amazing number, and it's actually far below what we expected in terms of this real estate market. I don't know why the homes aren't being sold. It's potentially also caught up by foreclosures. We may not see actual inventory volume up for sale if the foreclosure process has not finished. So once the COVID payments end and people have to repay or figure out their plans, then the foreclosure proceedings will start. So in 2021, you're probably not going to see a lot of those foreclosed homes, but you may see them in 2022 to 2023 if this does happen and there are a lot of foreclosures. So then you may have a crash. But in 2021, it looks like you're going to have a surplus, or you're going to have a boom in real estate, I should say, and you're going to be able to make some money. If you own a home right now and you're looking to relocate and cash out for retirement, or relocate to a better state, or even sell your bigger house and move into something more comfortable, this is a seller's market. You are going to be able to put up a property that's going to get multiple bids because of low interest rate, and you're also going to be able to get that house out of your hands faster. Every area is considering that it's a house or in a residential area or a suburban area, you're going to be able to really take advantage of the low inventory out there. Agents are going to bid on your house. And on top of that, people are going to want to purchase your house because there's nothing else for them to look at. And some people want to take advantage of that interest rate, which potentially could go up. Now, if you're buying a real estate property for renting, I would advise you to consider several options. It really depends where you live. And what the rent laws are today. Personally, I would stay away from buying a rental type property right now, because if you're relying on that rental income to pay off your mortgage or whatever it may be, and if you're short on money, or if this is one of your big investments for the year, you may want to ride out the wave and see what the rental income or market is going to be like. Right now, there's a moratorium. You cannot evict someone, and that will end later this year. However, if your renter decides not to pay you, you could be in trouble. So I'm not purchasing any rental type properties at the moment because, again, 1 in 4 renters cannot pay their rent. There are 4 people in the room. One of those 4 is not going to get you a check to cover your rent, and that's kind of scary. I would also stay away from non-residential properties at this moment, particularly in apartment buildings or even commercial retail space and so forth. Those type of markets right now are shaky. We don't know what this pandemic lockdown situation will be. We don't know if businesses are going to resume, and a lot of businesses actually have packed up, ended their leases and terminated their leases and left. So if that happens in this market, we are potentially going to be in trouble. And if you're investing in a commercial property to rent it, you could potentially be in trouble because there are a lot of vacancies out there and a lot of companies just cannot pay their rent. So stay away from commercial, or I would personally. Okay, guys, so real estate crash or boom in 2021, I personally think it's going to go up because of several factors. The mortgage rates being so freaking low that you could get a property for next to nothing. The availability of housing not being as available as buyers would like, making the supply a lot less, driving the price up. And the delay in foreclosures to potentially list houses on the market. January 31st is the moratorium lock that might be extended. However, past that time, it takes about a year to 2 years to properly do an eviction and a foreclosure on a house, especially if that homeowner gets a lawyer involved and so forth. You could really delay the process, and that homeowner could stay in their house for 2 years without having to make a single payment. So foreclosures are going to lag behind. The stock market is doing great. The interest rate is at an all-time low, and the foreclosures haven't happened. There's not enough inventory in the market. This is going to drive the price up unless there's a big shakeup. So it's probably going to be a boom until the stock market gets hit or one of those things happens that I mentioned earlier. I hope you liked this video. If you are considering investing in real estate, make sure you're getting a property in the best neighborhood, in the best area, and a residential property at this point for your own use. I would not invest in the property for rental at this time myself. If you're very experienced with that, go right ahead and get it done, and all the best luck to you. Thanks for watching this video. Go ahead, hit the like button and subscribe to the channel. As always, I appreciate it. Thank you.